Welcome to the deep dive,
Yeah,
where we break down complex investing topics
absolutely.
into easy to understand, nuggets of knowledge.
Yeah,
Get ready to make some serious cash.
that's right.
Because today we're diving into the ultimate showdown
Yeah.
between two dividend ETFs,
Okay.
SCHD and VOO.
Well, all right.
So are you ready to unlock the secrets
Let's do it.
to financial freedom?
I'm ready.
First, make sure you hit that subscribe button
Yes,
and smash that notification bell.
please.
We're about to reveal some game-changing insights
Game-changing for sure.
that you won't find anywhere else.
Yeah, so we'll cover everything from historical performance
Oh, yeah.
to volatility, those juicy dividend yields, and so much more.
Right.
Stick around to the end for Channel Vest's final verdict.
Okay, let's kick things off by introducing our contenders.
Yeah.
In this corner, we have SCHD,
Okay.
the Schwab U.S. Dividend Equity ETF.
All right.
This ETF is all about high-quality U.S. companies with a rock-solid history of paying dividends.
Love it.
Think reliable, steady companies that have been around for ages. And in the other corner, we have VOO,
Okay.
the Vanguard S&P 500 ETF.
Uh-huh.
This one's a heavyweight champion,
Big time.
tracking the performance of the S&P 500,
Yes.
giving you exposure to some of the biggest
Oh.
and most influential companies in the U.S.
For sure.
So we've got a dividend superstar
Yep.
versus an S&P 500 powerhouse who will emerge victorious.
Big question.
Let's rewind the clock and see how these ETFs have
Okay.
performed in the past.
Looking back at their track records,
Yeah.
VOO has consistently outperformed SCHD,
Really?
particularly in years when growth stocks were on fire.
Like when...
Remember 2023? VOO delivered a jaw-dropping 26.94% return,
Wow.
while SCHD came in at a respectable 17.47%.
Okay, so...
Big difference there.
Yeah, so if you were chasing those explosive returns,
Right.
VO would have been the way to go.
Definitely.
But hold on a second.
Yeah.
Past performance doesn't guarantee future results, right?
Absolutely, you got it.
Okay.
Investing is a marathon, not a sprint.
Oh.
And it's important to consider other factors
Right.
beyond just historical returns.
Like what?
For instance, how much risk are you willing to stomach?
Okay.
Let's talk about volatility.
Ooh, volatility.
Yes,
That's the wild card that can make or break
it really is.
your investments.
For sure.
This is where SCHD throws a curveball.
Oh, really?
The report reveals that SCHD
Mm-hmm.
is actually less volatile than VO.
That's interesting. Standard deviation,
What's that?
a fancy way of measuring how much an investment's price jumps around,
Okay.
is about 11.09%,
Right.
while VOO's is around 12.20%.
So even though VO might have those sky-high returns,
Yeah.
it also comes with a wilder ride.
It does.
SCHD, on the other hand,
Yeah.
is like a smooth-sailing cruise ship,
I like that analogy.
offering a more stable and predictable experience.
Exactly. And that stability
Yeah.
can be a major advantage for investors who are risk averse
Yeah.
or who are closer to retirement.
Okay.
But hold on tight, folks,
My.
because we're about to unveil the most exciting part.
Oh, really?
Dividend yields.
This is where things get really interesting.
I know, right?
SCHD's dividend yield
Uh-huh.
is a whopping 3.39%
Whoa.
compared to VOO's 1.25%.
That's a massive difference.
That is huge.
Dividend yield tells you how much cash you'll get back each year
Okay.
for every dollar you invest.
So a higher yield means...
More money in your pocket.
Okay, let's recap what we've learned so far.
Right?
VOO is the growth champion.
Yes.
SCHD is the king of stability.
Uh-huh.
And when it comes to dividends,
Yeah.
SCHD blows VOO out of the water.
You could say that.
But we're not done yet.
Not even close.
There are a few more key factors to consider
Oh, yeah,
for crowning a winner.
definitely.
Don't go anywhere, folks,
So please.
because we're about to dive into expense ratios,
Right.
sector exposure,
Uh,
and Channel Vest's final recommendation.
big stuff.
Make sure you subscribe to the channel
Yes.
so you don't miss out on any of the action.
You won't want to miss this. We
Yeah.
were talking about how SCHD delivers a knockout punch
It does.
when it comes to dividend yields.
Sure.
But remember, smart investors consider all the angles
Right.
before making a decision.
Okay.
So let's look at a couple more factors
Yeah.
that could sway your choice
I know
to
you're-
these two titans.
All right, so we've got growth, stability, and dividends covered.
Right.
What's next?
Let's talk about those pesky fees
Okay.
that can secretly chip away at your returns.
Oh, okay.
You know, those sneaky expense ratios?
Expense ratios.
Yeah.
Don't those sound like something boring only accountants care about?
Not so fast.
Oh, okay.
Even small differences in expense ratios
Really?
can snowball over time, impacting your long-term gains.
You're telling me a tiny percentage can actually make a big difference?
Absolutely.
Oh,
VOO boasts an incredibly low expense ratio
okay.
of 0.03%.
Wow, that's low.
That's practically giving your money a free ride.
Yeah.
SCHD is still pretty competitive at 0.06%.
Okay.
But even that slight difference
Yeah.
can add up over decades of investing.
Really?
It's like the tortoise and the hare.
Go ahead.
Slow and steady wins the race.
I see.
Busy.
So VOO takes the lead when it comes to keeping costs low.
Right.
But before we jump to conclusions,
Yes.
let's talk about sector exposure.
Okay.
It's like diversifying your investment portfolio.
Right. Exactly.
Yeah, putting all your eggs in one basket.
Diversification is key to managing risk
Uh-huh.
and maximizing returns.
Look.
VOO, being an S&P 500 tracker,
Yeah.
casts a wide net across all sectors of the market.
So like everything.
You get a taste of everything, from tech to healthcare to financials.
So VOO is like a buffet
I like it.
of investment opportunities.
Yeah.
What about SCHD?
SCHD is more of a selective eater.
Okay, so...
It focuses on sectors known for their consistent dividend payouts,
Okay.
like financials and consumer staples.
So those are like...
These are the companies that keep the economy humming,
Okay.
no matter what's happening in the market.
I see.
Think of it like this.
Okay.
VOO is like investing in the entire stock market,
Yeah.
riding the waves of overall growth.
Okay.
SCHD is like investing in a select group of reliable dividend-paying companies,
Yeah.
giving you a steady stream of income.
So it's like steady Eddie.
Exactly.
This is, risky business.
You could say that.
Okay.
Now, the million-dollar question,
Which is?
which one is right for you?
Ooh, that's a tough one.
I know, right?
Drum roll, please.
All right.
Let's hear what Channel Vest recommends.
Okay, so Channel Vest, the masterminds behind this report,
Yes.
suggest VOO for investors seeking long-term growth potential.
All right.
It's the go-to choice if you're aiming for maximum returns
Okay.
and are comfortable with a bit more volatility.
So VOOs for the thrill seekers. Yeah. The ones who want to ride the roller coaster of the market.
Exactly.
Okay.
On the flip side,
Yeah.
Channel Vest recommends SCHD for those who prioritize steady income
Mm-hmm.
and prefer a smoother ride.
Okay.
It's perfect for investors seeking consistent dividend payments
Yeah.
and a more stable portfolio. But hold on.
Why? Why?
We're not done yet.
There's more.
There's one last piece of the puzzle we need to discuss,
Oh, really?
and you won't believe what it is.
Okay, I'm on the edge of my seat.
It's
Okay.
something that often gets overlooked,
Okay.
but it can have a significant impact on your returns over time.
This doesn't sound good.
We're talking about taxes.
Taxes.
Yeah.
Ugh. Nobody likes talking about taxes,
I know.
but I guess they're kind of important when it comes to investing.
Absolutely. When choosing between SCHD and VOO,
Okay.
it's crucial to consider the tax implications of each.
Okay.
Let's break it down.
Right.
SCHD focuses on qualified dividends,
Okay.
which are taxed at a lower rate than ordinary income.
So it's good?
If you're in a high tax bracket,
Yeah.
SCHD could potentially save you a chunk of change come tax season.
That's a nice bonus.
Exactly.
So less taxes, more money for us.
Now, VOO, being an S&P 500 tracker,
Yeah.
also pays dividends. However, a portion of those dividends
Uh-huh.
might be taxed as ordinary income,
Oh.
depending on your specific situation.
So there are some tax nuances
Yeah.
to consider.
But the bottom line is that both SCHD and VOO
Yeah.
can be tax-efficient options for investors,
Okay.
each with its own advantages.
I see.
And remember, tax laws can change,
Oh, right. Of course.
so it's always wise to consult with a tax professional.
That's a lot to digest.
It is.
But hey, knowledge is power, right?
Absolutely.
And now our amazing listeners
Yes,
are armed with all the information they need
they are.
to make informed decisions
For sure.
about SCHD and VOO.
All right, folks, that wraps up our epic deep dive. So stay tuned, stay curious,
Okay.
and as always, happy investing.
Until next time,
Yeah.
keep crushing it.